And happy good morning to you. January 29th, 2024. Stephen Salvatore here with you for my pre-market show, my 3 for 3 and my pre-market show I'm going to be doing here just about every morning on my own YouTube channel. Some of you remember me from my podcast with Benzinga, and I've been on CNBC a couple times. I run a hedge fund here right now I'm in my Jersey office, but between New Jersey and Florida frequently throughout the month. I run a hedge fund, Sun City Capital. We mostly trade in short and long-term options. That is my specialty. I've been doing this for many years. And here I am to help you, the everyday trader, make good, solid investments and make money. That's what we do. We're looking for spots in the market. I am a technical trader, I would say 99% of the time. All of my trading, as some of you may have seen, I trade on linear regression and mean reversion, which in a nutshell, to put it in English, is basically the expanding and contracting of the market. That's where we pick our spots. We don't want to be in flat stocks. We want to be in stuff that moves, and we obviously want to be able to predict the way that it moves. And that is what our proprietary algorithm does. I have my own written algorithm that I spent years designing, literally years of trial and error, testing thousands and thousands of technical indicators, and I decided to write my own. I decided to take the most important indicators that are out there and the most important points to the way stocks move, and I mixed it all together into a system that I trade by, and it's very accurate. We use fundamentals. We talk about the fundamentals, meaning the news and earnings and stuff like that, but we're always down to the technicals. And what I do every day is I make a watch list that I narrow down for my daily intraday stuff that I trade, because I do day trade, and I also swing trade. So I'm looking for longer term stuff, options that are further out that I trade. Now, even when I day trade, I do trade options that have dates that are at least a few weeks out, usually a few months out. I will explain that frequently why I do that. It's kind of a safety measure that everyone should be doing. There's multiple ways to ensure your options trades. Typically, if I'm buying a call, I will either buy a straight call that's in the money or at the money, and if I am insuring it, I'm buying a put or I'm selling a higher strike against it. It's kind of like my insurance policy. And I do that frequently, and sometimes I don't insure. Sometimes I just take moves and I send it. It all depends on what kind of setups I have. It's very important to look at the setups, so on and so forth. So on to business for today. The indexes real quick. Let's take a quick look. So everything's up in the pre-market. We're looking green across the board. Dow is up a hair. It's at 38,100. We got the S&P coming up on 4,900 again. I do think that the S&P 500 is going to be well over 5,000 in the coming weeks. I will explain why today, shortly. But the S&P 500 and the NASDAQ are going to continue to run, most likely into the month of May, possibly June, and we will probably see a summer pullback. Again, I will explain why, but most of you know, I can state the obvious. Interest rates are going to be coming down. The federal government and the Fed, I guess the nicest way to put it is they're manipulating the economy. There's no two ways about it. Inflation is still on the rise for the most part, and they're going to drop interest rates. And why are they going to drop interest rates? Well, we know why. It's an election year, and they want the market to be doing very well going into the election. And this is just what they do. Whether you want to believe it or not, it's my opinion. Most people share my opinion. Some people don't. But the results will speak for themselves, and they always do. So we will keep an eye on that as we move forward. But the S&P 500, it will probably reach close to 5,200 before it pulls back this summer. We have an FOMC coming up next week, where Jay Powell will be discussing this interest rate pullback that most likely is going to start in March, maybe April, but I'm thinking probably mid-March. And the market is already pricing this in. Understand that. The market is already pricing this in, and that's why we're seeing this big explosion in January. Usually Januaries are flat. Anyone out there that trades and has traded for many years knows that January is flat. I know some top traders and some top hedge fund managers that don't even work in January. They don't even work. They go take their vacations in January because January is usually so damn flat. They just wait for the market to establish itself before they jump into anything late January, February. But this year, completely different story. Market exploded right off the rip. We've got stocks like Nvidia that absolutely are tearing shit up. I mean, I cannot believe that. I mean, I was trading Nvidia in around the holidays, and as most of you know, it was around 500. It's hovering that 500 level, and we're well into the 600s, which is just nuts. Just nuts. It's unbelievable. And Nvidia still has room to grow, which is sick. It still may continue to move here. Does have earnings coming up. But today we're going to talk about my big three. I've got three good ones for the week that I'm going to start my week off keeping my eye on. This list will most likely expand going into tomorrow. But the top three for today, and I'm going to go into some details, are Micron, Meta, and Walmart. So we're all, Micron and Meta kind of in, we're here in the tech sector. So Meta is on a beautiful run here. So Meta, as most of you know, last year got kind of torn up in the beginning of the year, but they recovered nicely from that. And they are all over this AI stuff. Just like anyone else. But as far as social media is concerned and the sector they're in with advertising, they are top notch. And that's why you're seeing such a massive run here in Meta. So I have Meta on the screen here, and typically I start whenever I'm analyzing a stock, I'm usually starting out on a daily time frame, sometimes weekly, but usually generally the daily, because usually my trades last anywhere from day trades, which could be minutes to hours, and into swing trades. My typical swing trade is 3 to 4 days. Sometimes maybe we'll go up to 5 days or a week or whatever, but that's typically the range I'm looking. I'm looking to get those weekly moves because stocks do move a lot over the course of a week. So I try to judge where I feel it's going to be in a week, and I like to also pick up the intraday action on some of those days where it really pops and loads up or sells off during the day. In this case, we're looking at calls. So Micron, Meta, and Walmart, all three are in very similar positions here. So Meta, I have on my screen here, and I'm going to pull up Micron. And Micron's kind of the same thing. So we have buy signals on all three. They've been running nice. Now, here's the deal. The difference between the three is possible potential catalysts that are coming and the timing with those catalysts. So Micron had its earnings back in December on, I believe, the 20th. So we're not going to see Micron earnings again until March. But here's the deal. Micron very much in the chip AI game. As most of you know, Intel took a shit last week. Intel's just way too far behind when it comes to their AI chips and kind of where they are in that game. So Intel's too far behind. That's why they took kind of a dip on their earnings, and Nvidia and AMD have been skyrocketing. So Intel kind of came out of that game, and it's a shame because Intel was always kind of a leader with chips, but they're just not there anymore. So Intel is out for now. Might be a stock we come back to later in the year, depending on what happens, because they do have a lot of things in the works. They are building new chip factories. They are trying to ramp up their production. So I'm sure they have some plans to jump into this, but right now they're just not ready. So it's nothing really to look at. If anything, it's probably going to pull back a little bit more before it has any chance. But it's been hovering in that $40 to $50 range for just way too long. It's too flat. Whereas AMD and Nvidia, they're skyrocketing. But Micron, I also feel, is going to be on that list. So not only do we have these buy signals, but my friends over at Market Rebellion reported some unusual options activity last week on Micron. Now, unusual options activity is enormous in what we do. So I only trade options, but I have my technicals and I have my fundamentals. But the last piece of the puzzle that we're looking for on any sort of confirmation is unusual options activity. So if I'm lining up here on my technicals are giving me a buy, we have potential catalysts, we have potential earnings and other things pumping a stock. And then on top of that, we get some unusual options activity and we see calls loading up maybe a couple months out, like we see with Micron. Then that definitely becomes something that we want to look very closely at and take some potential long positions on. I'm potentially going to be taking some long calls on Micron, and these are going to be a little bit out of my usual trades that last a week. I might be taking some stuff that might kind of go into the next earnings, so it's 2 months out. So I'm going to be going a year out mostly on some calls. And when I trade options, I'm always trading right at the money. So if the stock right now is trading, we're at $88.40 for Micron. I'm going to be buying those 88 or 89 strike prices. That's what I'm going to be doing. And if I'm insuring against it, if I want to bank against it, not with a straddle, but just kind of like either puts against it, I'm going to go either at the money puts or a little bit in the money puts, or I'm just going to sell calls maybe a couple dollars above the strike. So maybe I would pick up, sell $92 calls against my $88 buys, or just to make it simpler, I could just buy puts against it. You can do it either way you feel comfortable doing. But that'll cap my potential, but it'll kind of insure me, so no matter which way the stock goes, I have very limited loss. But if I'm very sure of something, like if I call it the big three, meaning I've got my technical indicators lining up and I've got a double green light going there, I've got unusual options activity showing that big institutions are banking, or someone with a lot of money is banking on some big movement. If I get that trio together, I might just load up on calls and say, forget it, I'll set a stop and send it. And that's most likely what I'm gonna do here with Micron, because I feel like Micron's really gonna be part of this AI thing. They're all hands on deck. They produce parts for companies like Nvidia and AMD, so they're kind of on the back end of that. So as long as they stay in it, which it looks like they are, you're going to have some big moves. Now, their sales did pull back last year. They got cut in half. So that's something to look at. But the way the stock is moving just shows that there is some leaking information out there and some public information out there that Micron's going to do extremely well. So Micron, absolutely, if you're looking to load up on something, I really like Micron for both short-term moves and long-term moves. I'm going to be looking at calls on both. But again, do your own research. Look into it by all means yourself. I'm just going to give you the right direction of what I do. And, my win rate typically is in the 75% range. I've done very well for a couple of years. It's been a long time to get to this point. But again, everyone has their own system. I recommend you develop your own system. You're more than welcome to ask me questions about mine at any time. Be happy to share with you everything and with how I pick stocks and how my indicators work. But by all means, do your own research. It's your money, and you want to always protect it and never invest more that's out of your range. Always be very safe with it. Typically when I'm trading any trade, I'm never risking more than 2 or 3% of my total portfolio value on a single trade. That's just kind of the way I go. Occasionally, if I ever get super aggressive, I might go to 4 or 5%, but that's rare. Usually I'm in that 2% range, and you should always be that way. So typically, if you have 100 grand in your portfolio that you're investing, you never want to lose more than 2,000 on a single trade. That's where you want to set your stop loss. And you always want to be trying to make 2 or 3 to 1 on your wins. That's going to be your goal. So, your stop loss is set at 2, but you're trying to make 4 to 6,000. So you want to build a system that enables you to do that. And it is possible. Believe me, it is. There's lots of people out there, including myself, that are able to do it. It just takes a lot of time, work, and discipline, and a lot of back testing. I use TradingView for my back testing. Most of you are aware of TradingView. You can back test decades on TradingView, and I probably spend 2 to 3 hours every day, win or lose in the market, back testing, every day. I will back test this morning before the market opens, and I will back test tonight again, and I will back test all weekend. It's what I do constantly, especially if I'm trading something new. Now onto Meta and Walmart, same signal here on both of those, but the difference is that Meta has earnings coming up. So let's take a look here real quick on the date exactly so we can time this right. So Meta has earnings coming up on February 1st. And so we're going to mark our calendar with that. So that's going to be a big day for Meta. And then Walmart is coming up on February 20th. So we got February 1st on Meta and February 20th on Walmart. But these are both stocks that I feel that you can definitely get into now. I'm going to be trading Meta today, intraday. I'm going to be trading Meta all week. Meta is showing a massive, massive buy signal. And it's just, there's no end in sight for it just yet. So yeah, so we are in great shape, double greens across the board, you know. And when I come off the daily, I'll go to the 4 hour, and that's usually where I make my move on a swing trade. So if I'm showing a buy signal on the daily, I'm waiting to get the buy signal on the 4 hour to jump in to that daily trade. So you're always trading against time frames, understand that. So, you know, if I'm trading a swing trade, I just happen to use the daily. That is the time frame that I use for swing trades. But I'm picking my spots off of slightly shorter time frames because that's showing the momentum changing. That'll help me pick a better spot, possibly on a dip, because stocks move up and down. So even if I'm showing a big move up on the daily, you know, it could pull back on the 4 hour, and that's where I'm going to wait for it to turn around and maybe pick it up a little bit cheaper, make sure I get a good spot. And lastly, we're going to go to Walmart here, which again, February 20th, another absolutely massive buy signal. This is probably the strongest out of all of them. I see Walmart maybe pulling back a little before the earnings come up on the 20th, which is in about 20 days, but it is going to be an overall bomb on its way up. It's trading at 164 right now. I do think we're going to see 170, possibly 175. Now understand with Walmart, the big thing here is two things. Number one, Walmart took a little bit of a beating last year. And the reason why is, if anyone remembers in retail, so particularly Target, Walmart, a lot of these companies got over inventoried coming out of COVID. Their sales were so massive, you know, through COVID. Their pullback, their inventory caught up with them. They had a lot of excess. They had to get rid of that problem and get back on the ball with timing their inventory. Both companies did that very well. That's kind of in the past. Target did it better than Walmart. That's why Walmart took a bit of a hit. But now Walmart is rocketing back from that big dip. And we will see what continues to happen here. But Walmart is on a huge move upwards here. So keep a good eye on it. Going into earnings, we're going to see positive growth. But you know, the second part of that is they should receive really good earnings for quarter four. The holidays were very explosive. If people remember, there was a Santa Claus rally. A lot of that was driven by retail being very strong. Those numbers are now going to come out in the next earnings report, which is coming here in February. So you're going to have Target, Dick's Sporting Goods, all those guys too. And we're going to talk about those companies this week. But right now I'm focusing on Walmart because it has such a strong buy signal. I want to get involved in trading it this week to see, because I think it's got a little bit more chicken on the bone as far as going up. So again, big three to watch this week, starting out Monday. Again, let's see how the market plays out this morning. Let's see what happens. But as of right now, those are the big three: Micron, Meta, and Walmart. I'm going to be looking at this morning and throughout the week, and we will see what continues to happen. So, like I always say, you know, find your own strategies and find a system that works for you. You can use my system. I'd be more than happy to share it with anyone. I do this for free. I do it to help people. But yes, good luck, and I will see you guys tomorrow.